Let's be honest. You're a founder, a CEO, an operator. You build systems, you execute plans, and you get results. In your business, you are disciplined, you are in control. But when you step into the market, something just breaks, doesn't it? You find yourself making these reactive, impulsive decisions, the kind of decisions you would never ever tolerate in your own company. And you're frustrated because that same discipline that makes you successful everywhere else, it just seems to vanish. Look, the problem isn't that you're not smart enough, and it's not a lack of willpower. It's an invisible flaw in your decision-making process. And today, we're going to fix it. So, why does this happen? Why do some of the sharpest, most decisive leaders on the planet turn into emotional, reactive traders? That is the central question we're here to answer. And let me be clear, this isn't some personal failing. It's a cognitive bug. And like any bug in a system, it can be identified and it can be fixed if you have the right process. All right, here's our plan for today. First, we'll identify this invisible saboteur. Then, we'll give it a name, availability bias. We'll break down exactly how this bias hijacks your mind. Then we'll give you the systematic counterattack. And finally, show you how to operate with real discipline. Okay, let's start with the symptom, the pain point. You know that feeling, right? A big, market-moving headline flashes across your screen, and you get this sudden, almost uncontrollable urge to do something, to sell everything, or to chase a hot trend before you miss out. It's that impulse to react to the noise, completely abandoning the plan you had just an hour ago. And this, right here, is the core issue. The moment you start trading based on the latest news story or a recent swing in your portfolio, you've surrendered control. Your process is gone, completely replaced by reaction. And that path only leads to inconsistent, unpredictable results and that gut-wrenching feeling that you're not operating anymore, you're just gambling. So what is the diagnosis for this symptom? Well, it actually has a name. We're not fighting some kind of ghost here. We are fighting a specific, well-documented cognitive bias. So let's define it. It's called the availability bias. See, your brain, in an effort to be super efficient, takes a shortcut. It gives much more weight to information that is recent, vivid, and easy to remember, completely regardless of whether that information is actually statistically relevant. It's a feature of the human mind that becomes a serious bug in the modern market environment. Let me show you how this bias works in the real world. Just ask yourself, what do you fear more, a shark attack or a falling coconut? Almost everyone says sharks. And yet, statistically, you are far more likely to be killed by a fallen coconut. So why the disconnect? It's because shark attacks are vivid, they're dramatic, they're amplified by the media. They are highly available to your brain, so you overestimate the risk. Coconuts? Not so much. This is exactly what happens with market news. You have to understand the triggers. First, there's the recency effect. Last week's market drop just feels way more important than the entire last decade's trend. Then there's vividness. The memory of a financial crisis is so emotionally charged and easy to recall that it totally skews your perception of risk going forward. And of course, media amplification, which makes sure that the most dramatic, fear-inducing stories are the ones you see over and over and over again, making them seem far more common than they actually are. So let's look at how this plays out in the market. This isn't just some abstract theory. It has a direct, measurable, and very costly impact on how investors behave. It can even divide entire generations. Think about this generational divide. An investor who grew up during the Great Inflation has that memory of crazy high inflation and terrible stock returns easily available in their mind. So their decisions are anchored to that fear. Now contrast that with an investor whose primary experience is the post-2009 bull market. For them, a decade of buy the dip and quick recoveries is what's readily available. Their decisions are anchored to optimism. Now, neither perspective is the whole picture, but they're both incredibly powerful because they're based on the most easily recalled personal experience. And this quote from Morgan Housel just nails it. People's lifetime investing decisions are heavily anchored to the experiences those investors had in their own generation. Your personal history, especially your early experiences with money, becomes the default data set your brain runs on. It's the most available information you have, and it can shape your entire financial strategy for life. And this is where the damage is done. The availability bias is the root cause of panic selling during a downturn because the fear and the pain are so vivid and recent. It's the reason people pile into a bubble right at the top, because the stories of fast, easy gains are everywhere. It drives you to make critical decisions based on emotional noise instead of objective, long-term data. Okay, we've diagnosed the problem. Now let's talk about the cure. Here's the key. You don't fight a cognitive bias with more willpower. You fight it with a system. At STOA, we call this the STOA protocol. It's specifically designed to short-circuit these emotional reactions before they cost you. These are the mechanics of the counterattack. Number 1, diversify your information sources. You have to look beyond the headlines and seek out comprehensive, objective data. 2, implement predefined rules. A systematic, written trading plan with crystal clear entry and exit criteria is your greatest defense against emotion. 3, focus on long-term data. You must prioritize decade-long trends over daily volatility. And 4, use pre-commitment strategies. Automate your decisions now so your emotional self can't sabotage the rational plan you made today. But this isn't just a checklist. It's about shifting your entire mindset from being a reactor to becoming a professional operator. It's about building a fortress of discipline around your capital. Look, your brain has 2 systems. System 1 is the reactor. It's fast, it's emotional, it's instinctual. This is where the availability bias lives and thrives. But System 2, that's the operator. It's deliberate, it's rational, it's reflective. This is where your systematic process lives. The entire goal of a professional is to consciously engage the operator and prevent the reactor from grabbing the controls. Let's be very clear about something. You will never control the market, so stop trying. True mastery isn't about predicting the future. It's about mastering the only things you actually can: your process, your discipline, and your reactions. That is the only edge that lasts. So this brings us to the final question, the one you have to ask yourself. When the market makes its next big move, are you going to be reacting to the noise, or are you going to be executing a documented professional process? Your answer to that question will determine your results, period. If you've made it this far, you're not just curious, you're serious. And that's exactly who STOA was built for. Now here's the deal. We don't accept everyone. We run on an application-only system because we only work with people who are truly ready to operate at the next level. So if you want to stop wasting hours chasing noise and instead run a proven, documented process that gets real results in less than 90 minutes a day, then you should apply now. There are limited seats, and once they're filled, they're gone for the quarter. Click the link in the description, fill out the short application, and let's see if you're a fit. If you're watching this, my guess is you already know you should.